Let's talk about tax-efficient charitable giving today, specifically qualified charitable distributions, or QCDs for short. Welcome, I'm Elliot Apple, founder and financial planner of Kindness Financial Planning, and let's get into the weeds a little bit today about charitable giving. QCDs, or qualified charitable distributions, are one of my favorite topics when it comes to charitable giving. So you may be wondering, what is a QCD? A QCD is a distribution from an IRA when you are 70 and a half or older. And the nice thing about this is it's going directly to charity, so you're not taxed on it. So what you'd do is you'd simply request a distribution from an IRA once you're 70 and a half, and that is a key point there. You actually have to be 70 and a half by the time you make a QCD. It can't be the year you turn 70 and a half. You actually have to be 70 and a half at that time. So what you do, let's say you want to give $5,000 to a charity. You can request a distribution from your IRA. It goes directly to charity. And then when tax time rolls around the following year, you simply make a note that $5,000 went to charity and put QCD next to the line there, and then it's not taxable to you. Now, this is really effective because it's reducing your taxable income. It's a top of the line reduction. It's not an itemized deduction. When you make a QCD, it's not like other charitable contributions where you actually have to take a deduction and it has to be itemized in order for it to be effective. This is an above the line deduction. So let's say you're a required minimum distribution, or you don't have one maybe, but let's say you do, and it's $20,000 and you decide to give $5,000 to charity. The $5,000 isn't taxable. So it's not like you're distributing $20,000 and then taking that $5,000 deduction. It's $15,000 is taxable to you, and the $5,000 isn't because it went directly to charity. Now, a question that comes up often is, could I make distributions to a donor advised fund or a private foundation via the QCD method? And the answer is no. It has to go directly to a nonprofit or 501c3 charity. It can't go to your own donor advised fund or a private foundation. So when you make that distribution, you want to make sure you're not receiving anything in return for that as well. So if you get certain member benefits for making charitable contributions, like special dinners or tickets to something, a QCD isn't necessarily the best method to give in that situation. It's a little bit more complicated, and you'll want to talk to your accountant about that. I talked briefly earlier about how you can actually make the QCD, and depending on the custodian, there might be slightly different methods. There's usually two popular methods. One is you can attach a checkbook to an IRA, so you can write a check directly. I don't love this method in most situations because you never know when the charitable organization is actually going to cash the check, and you can run into some timing issues. For example, if you write a check in late December, what if the check doesn't arrive until January of the following year? Or what if it arrives but it sits on the organization's desk because everybody's out of the office, or it just gets misplaced? You run the risk of that not being distributed essentially from your account in the year that you want it to be distributed. And so that is an issue, particularly if you're using a QCD to fulfill part of a RMD, or required minimum distribution. Let's say, going back to that original example, your RMD is $20,000, you've already distributed $15,000 out, and now you're doing $5,000 as a QCD. Well, if that doesn't get cashed until the following year, you have a shortfall and potentially could face a penalty. So I like the second method better, where you go directly to the custodian and request a distribution. And sometimes you can set up what's called a standing letter of authorization. So that way you can request distributions at your convenience, and it's immediately deducted from your account. And I like that method because, again, it's getting deducted right then and there. You don't actually have to worry about mailing the check. The custodian will do it. And then I usually suggest just making a note in your tax file or an Excel spreadsheet that says how much went to charity. Because what I alluded to earlier is the custodian's not going to report it any differently. So if you do a $20,000 distribution, $15,000 went to you, $5,000 to the charity, the custodian's just going to report on the 1099-R that there was a $20,000 distribution. You or your accountant need to specifically specify that $5,000 was a QCD, and that's not taxable to you. And again, you're essentially just writing QCD next to that and reducing the taxable amount. But talk to your accountant about it if you're confused about it, and they should be able to clear anything up for you. Now, you may be wondering, is a QCD right for you specifically? I'd say if you do charitable giving, there's a good chance it is. And I should add that you're over 70 and a half, because again, this only works for folks who are over 70 and a half. But if you are over 70 and a half, you have an IRA and you've been giving in the past, QCDs can make a big difference in terms of taxes because, again, you're not itemizing the deduction. A QCD can be an excellent way to give because you are reducing your top of the line income, which means that if you do Roth conversions or other things, this can be used in tandem often with those, you can reduce your gross income, which can potentially reduce IRMA or the Medicare surcharges that you're paying because you don't have that additional income that's top of the line. You're not waiting for the reduction below the line, which won't necessarily help with the IRMA surcharges there. So QCDs can be a strategy that can be used in tandem with other types of charitable giving, with Roth conversions or other tax planning strategies, which is why it's really important to figure out what you want to do, how much you want to give, and figuring out with a coordinated plan about the best way to accomplish it. In summary, QCDs are a very tax efficient form of giving for folks who are over 70 and a half. It can be an excellent way to fulfill required minimum distributions if you have more than you necessarily need to spend, and it can already work in tandem with what you're already giving. So that's why it's a really effective way. Oftentimes when we switch this, it results in pretty significant tax savings for people, particularly versus a below the line deduction, or if they're not taking the deduction at all because the standard deduction is so large. So if you're interested in learning more about this, feel free to hit subscribe or contact me for an introductory meeting. Enjoy.